ASML, ticker symbol of the same name, just reported earnings before the open. The stock opened on the European exchange and it is down 7.5%, brutal price action. And we're going to talk about ASML today, why the stock is down, and is this a buying opportunity? But before we dive in, if you could please go ahead, like and subscribe. It really, really helps me out. So for those of you that have been living under a rock, I'm sure each and every single one of you know, but ASML designs and manufactures lithography systems, right? They build these massive machines, which are essential for producing microchips or chips or integrated circuits. These machines use light to project patterns onto silicon wafers, enabling the creation of these intricate circuits found in virtually all electronic devices. ASML is the sole supplier of extreme ultraviolet EUV lithography machines, which are needed to manufacture the most advanced chips, specifically 4 nanometer and below. Also, fun fact, ASML stands for Advanced Semiconductor Materials Lithography. It's actually an acronym. Now let's talk about the earnings. It was actually pretty good. Revenue grew 23% year over year, beating the analyst expectations. The street wanted $8.5 billion. ASML reported $8.7 billion. And this was actually at the top end of their guided range. And then earnings per share grew 57%. ASML reported $6.69 against the street's expectation of $5.94. When we look at the margin profile, gross margins expanded, net income margins also expanded. Very, very solid stuff. And when you look at net income, the company grew its net income significantly from 1.5 billion all the way to 2.29 billion. And that is why earnings per share grew 57%. And when we look at the company's balance sheet, it's also very, very healthy. $3.6 billion worth of debt against $7.24 billion of cash. So there's no blow up risk in this company. So when you look at these headline earnings, right, they're great. They're fantastic. There's nothing really to fault here. So you have to ask the question, why was the stock down 7%? And it all came down to its guidance. There were a couple of things that were missing with the guidance. More specifically, the CEO, his statements, he said, looking at 2026, we see that our AI customers' fundamentals remain strong. We continue to see increasing uncertainty driven by macroeconomic and geopolitical developments. Therefore, while we still prepare for growth in 2026, we cannot confirm it at this stage. So they're saying, hey, 26 is looking uneven. We don't know what to expect just yet. And as a result, the market's gonna sell first, ask later. Also, when you look at their more specific outlook for Q3, management guided for 7.4 to 7.9 or $7.7 billion at the midpoint. The street was actually looking for about 8.1 to 8.2 billion, somewhere around there. So even the top end of the range just missing that midpoint figure. However, everything else came in line. Gross margins of 50 to 52%. R&D costs of 1.2 billion and SG&A costs of 310 million. But essentially with these not going down, relatively speaking, it is also technically a miss because the guide came in lower than expected. So there is that. However, for the financial year 2025, ASML reaffirmed their full year guidance of around 15% net sales growth and gross margin of around 52%. So essentially, they're saying we're going to see a weaker Q3. The full year still looks very much intact. Everything should go along as normal. And then 2026 is looking more uncertain. And that is why the stock is down 7 or so percent here on today's trade. It just has to do with a little bit of uncertainty. That's pretty much it. And a little bit of a weaker guide. You may even say the Q3 guidance was sandbag, especially considering the news we got from China. That is going to increase the demand environment for semiconductors, and ASML plays right into that. But that news was only released yesterday. Obviously, this PowerPoint, their remarks, their earnings were definitely prepared, I would say, up to a month in advance of this. So it's really hard to include that in the most recent developments. Nonetheless, a weak Q3, solid 2025, and uncertain 2026 makes for your stock going down 7%, especially when the valuation looks a little frothy. But diving into the financials on a more granular fashion, guys, for the quarter, there's actually nothing to fault about the company. Just stellar across the board. This is a company that prints money and has extremely high margins. You can see here Net sales increased 23% for the quarter, $7.6 billion. It's here that total cost of sales was up 17%. So that's operating leverage, right? So you have your expenses up 17%, net sales up 23%. Then you actually have your operating costs, which were only up 6.3%. This is really, really good. This is what you want to see. This is operating leverage being built. Very, very solid stuff. And that is how you get your net income increasing 45%. And then with share buybacks, that's how you get that earnings per share of 57% growth. Looking at the company's total net sales by end use. So we have the last 5 years right here, and then what we're doing through 2025. And you can see some very constructive stuff. So ASML has the segment right here called install base management, which is essentially once they've installed a machine, you need someone to run and service that machine, and they collect revenues from that. It's ongoing revenues. So ASML sort of have this big upfront spend and then ongoing recurring revenue. That's why this business model is so attractive. So that is looking at $4 billion through 2025 through the second quarter. So if we annualize this over the next 6 months, so just essentially double it, we're looking at about $8.1 billion, right? Versus the 6.4 in 2024. So you're looking for a material increase on a year-over-year basis. When we look at the logic, right, which is essentially the largest of their machines, their logic processors, they've seen $7.1 billion of growth through Q2. They're looking at $13.2 billion last year. Again, if you annualize this figure, you're looking at about $14.3 billion, another material increase. And then looking at their memory systems, they're looking at $4.1 billion. And if you annualize this, it's about $8.2 billion. And that's just under actually a deceleration from 2024. So we're still seeing a healthy figure at about $8.3 billion, somewhere around there. But that is a decrease from the year prior. However, if you look at the growth from 2023 to 2024, it does look like we did have a memory upgrade cycle, because this is a material return from 5.9 to 8.5. That's close to what? 25% increase, 30% increase on a year-over-year basis. So you're having a little bit of a consolidation. And that's generally what we see in 2021 to 2022. We had a massive increase. Then we had a flat-ish year from 2022 to 2023, a massive increase in 2024. So I'm assuming we're going to have a flat year in 2025, the end of it, and then we should see a material increase in the memory segment. That being said, everything looks largely healthy, nothing to be concerned about. So with all that said and done, where does that leave us with valuation? Now, if you take ASML's trailing 12-month revenue, it's about $32 billion. Now, this is in US dollars, and this ticker right here is on the NASDAQ exchange. Just be aware of that, guys. They trade on the Euronext exchange as well as the NASDAQ. So you take the $32 billion, and the consensus revenue growth forecasts is for 11% growth linearly through 2029. Now, I do know that it's 15% next year, but when we average it out, we're looking at 11% growth. We're just trying to make this as easy as possible. And then we're looking at EBIT margins currently at 33%, and that's set to grow to 39% to 2029, right? Again, these are consensus expectations. Then you're looking at earnings before interest and tax of $21 billion. The current EV to EBIT is 27. So I'm looking at using a 25 times multiple, which in my opinion is very, very frothy. The S&P 500 trades at about a 14 EV to EBIT multiple, but a business like ASML, where it does have recurring revenue and almost monopolistic characteristics, does deserve a tiny bit of a premium. Then you get the enterprise value, subtract the net debt. Company has a net cash position of about $3.4 billion. You get the equity value, divide by shares outstanding, which are sequentially decreasing by about 0.5% every single year. And then you get a 2029 stock price of $1,384. The current stock price is $823. In fact, I do believe after the 7% pullback, it should be at $760. I've actually gone and updated the price. It is about $760 right now, guys. And then you add the 0.72% dividend yield, and you're looking at about a compounded annual growth rate of about 13.4% and a fair value of $688. So Is ASML a buy right now? According to my valuation model, it really isn't, because this is sort of like not the base case. This right here is the bull case, right? You see like double-digit revenue growth, margins expanding a lot, and a 25 multiple. This is the bull case scenario for ASML, and you're only eking out about 13% compounded annual returns. What I generally like to do is see like a 13% CAGR on my bear case. So for me, ASML isn't a buy right now. You're just not getting much of a margin of safety out of this business, despite what an amazing business it is, and it just keeps executing quarter after quarter. However, for those of you that are interested in the stock, you're not just getting the stock price appreciation. The management team is delivering a lot of value back to you guys. The company pays a $6.40 dividend per share. That's about 0.7% per year. And the company is also buying back stock. They buy back anywhere from about 0.5% to 1% of their equity every single year. So you're not getting diluted. And you could see that the share buybacks as well as the dividend have increased tangibly over the years. Since 2015, the dividend was $1 in 2015. It's now $6.40. That's a 6x increase, right? And roughly the same year with cash returns in dividends going from about $5 billion to about $42 billion every single year. So you are getting value as a shareholder, and this management team does cherish that relationship with its shareholders. If you are looking for ASML as a trade, guys, I think if we do get a pullback to the 720 level, there's a lot of confluence here. It was a resistance zone we used earlier in the year right here. So if we do get a pullback to this level, right, 720 is the go zone, because we used it as resistance right here. We also used it as resistance at this point right here in 2024. And then we actually broke out from this area right here and used it as support right here, kind of. So essentially resistance turns into support, and the 720 is a very, very key area. We're going to see that these blue bars, it's a high volume area at this level. So if we do get a pullback to the 720, you could potentially be a buyer here. You could use tight stops, looking for a move probably back to these highs. Potentially, maybe by the time the other quarter comes around, you get more visibility on 2026 earnings, then you can start aiming for the upper 800 level in ASML. But as it is right now, the stock is likely going to consolidate. If it does move lower, I would look to the $720 area as a buy zone, looking for a short-term trade. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.